Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, October the 26th. I'm going to take a brief minute as markets continued their sell-off last week with the S&P 500 down 2.39% on the week. The S&P 400, a measure of mid caps, was down also, down 2.03%. And the small caps also down, but not as bad, with the S&P 600 down 1.6% on the week. And we have, coming into this and coming into this week and coming into this quarter, we have been told by pundits, and I've talked about this a lot, about the inevitable recession that we were going to have as a country. And those fears were really ratcheted up over the last couple of weeks, as well as geopolitical tensions with what's happening in the Middle East. But earnings have been good so far that we've gotten. And today we got third quarter GDP, our first read, and that came in at 4.9%, which is a sign of a very, very strong and healthy economy. So what you see in response to that is you see a stock market sell off today where the indices are down because the thesis is that the Fed's going to have to now do more, inflation's going to be around more, the economy's not slowing, the recession's being pushed out even further, so into the second half or the third or fourth quarter of 24. And so that's really kept investors on the sidelines. But what's a couple of interesting things that are happening. Number one, what we're getting today and out of corporate earnings are very, very positive numbers and big beats. But what's happening is, because there's so much fear in the marketplace right now, you have investors and professional investors finding the one negative thing in a corporate earnings report and selling off that individual equity, as well as you have the leadership here in the last 2 days that have been the Magnificent Seven or the 10 that have been working. You're seeing profits being taken from those as they are reporting earnings. And what's interesting about the diversion that we're seeing today in the equity market is, while we're speaking currently, the small cap index and the mid cap index are actually positive today, with the NASDAQ down over 1%. This is very, very good news, and it could be the start, I'm not going to call it, but a very encouraging sign to see these sectors that are so cheap and these equities that have been beaten down so hard actually performing. And you're seeing some buying pressure today in these individual names. So what that tells us is maybe the market is getting cheap, and you have to have the top producers that have been leading the market. You're going to have to see some selling pressure here to buy the other names, because we are not going to see a flood of liquidity into the marketplace, because the Federal Reserve is going through quantitative tightening. So for the last 13 to 14 years, we have been in quantitative easing, where the Fed is putting money into the system. Well, right now the Fed's taking money out of the system. So you have fewer dollars chasing these assets, and so you can only buy so many things. You don't have unlimited dollars, you can only buy so many. And so that's why the market has been so narrow, is if I only have $100 to spend, well, I can only buy 10 things. I'm not going to buy 500. And so you're seeing that happen in that dichotomy in the equity markets. But if you look at the underlying stocks as a whole, the average stock is incredibly cheap and is producing, most of them, positive earnings growth. We aren't seeing the earnings recession that we were also told that we were going to see by these same pundits and these same economists calling for this. Remember, we have a lot of stimulus coming down the pike as we enter into 24. I've talked about it many times, but again, it's the Inflation Reduction Act, it's the CHIPS Act, and it's the infrastructure bill. We're onshoring. We're bringing jobs back to the United States. We're going to be producing more things here. We're going to be doing that starting next year. We're going to have shovel-ready projects going. So stay patient, stay the course, and look for some opportunities here in this market. Like I said, a lot of things are cheap, and if you have a company that produces great earnings but for some reason says something a little bit negative in their commentary in their earnings call, and it's down 5-6% off of that, what a great opportunity to go in there and snag something up. So if you have questions about what looks great or how to buy stuff for yourself and what you should be looking at in this environment, give us a call. We'd love the opportunity to talk to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.